Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Monday, October the 24th, 2016. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live sessions to take a look at the market, macro to micro, take a look at the structure of the market, then drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room, so if you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to each day in the pre-market session, and then live during the trading session where we do live market analysis and live trading. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so take a look at what happened on Friday. Our main hypothesis was an open auction just out of range or just in range, and it moved down, and then somewhere between the range low and the 2050, we were looking for responsive buyers to step in and rotate us up and work our way up into the 36 area, and I was actually looking for possible continuation up into the 44 and testing the other side of that key balance that we were trading on. We did get long, and we sat in that long from 27.25 all day until we finally got taken out right here on the move up into the 36.75, and then they just basically found that balance around there, went sideways into the close. Our close on Friday was 21.3475. We have opened up and rallied in the Globex so far. We've come up, we broke through that 43.75, 44 area and went up into the 47.50, and since then we've come back down. And this is a good example of a long-term price price rejection turning into a short-term price acceptance as they battle that. You can see that our VPOC overnight is actually 44.25, just one tick below that 44.75 that we're 44.50 that we're using as our key line in the sand. We have a double distribution overnight, and we've got a pretty wide LVN that starts at 42.50 all the way down basically to the 40.25, and then we get into the lower distribution where the HVN is basically in around that 36, 37 area. But let's just take a step back. I always like to start my day. Let's take a look at the news first. We've got wholesale inventories that just came through in the last 15 minutes for Canada. They came out better than expected. 9 o'clock, we've got China CB leading index. And then we've got a bunch of Fed speakers this morning. We've got Dudley and Bullard speaking at 9. 9:45, we've got flash manufacturing PMI, and then we've got some European news, but nothing really big beyond that. There is the Canadian Bank of Canada Governor Pallot's speaking near the end of the day, but the most important one will be what Dudley and Bullard have to say. I don't know why these Fed people think they have to speak so much, but they certainly like to hear their voice. Okay, so let's take a look at the macro to the micro. You can see I like to start my day with a candlestick chart, simple candlestick chart with a 9 EMA, 20 SMA. I'm looking for slope and separation for the strength of the trend, where the trend's being challenged or violated. Monthly, very multi-year, strong trend up. Then end of 15, beginning of 16, they challenged it, and so far the rest of 16, we've gotten above the 9 and the 20, and we're getting slope and separation. So the upside, we came down this month and challenged the trend at that 2107 area and bounced, and we've got a pretty strong bounce. So the trend is up on the monthly. On the weekly, we've been going into this consolidation, this symmetrical triangle. We've now are starting to break above the 9 and the 20 on the weekly. So it looks like we could get some continuation if we can hold above this this 9 EMA, which is sitting at 43.25. Going to the daily, you can see that we had this downward trend, then we went into consolidation, and we're in this symmetrical triangle. We broke it to the downside. Now we're working our way back up, and we're now above the 9 and the 20. So we get the possibility of changing the downward trend. We just came up and took out the naked cross that we had at 46.50 up on the daily. Going to the intraday, see that we're getting a move up. Now we do have a possibility of a FUBAR Mr. Sneaky tech gap. I am looking for rotation back down to close at least half the gap and then possibly a continuation up. But we are above the 9 and the 20. We've got a naked cross down at 36.25. That's right near that price acceptance. So might want to mark that down on your chart. Going to the 1 hour, you can see we've got good slope, good separation. We just came down and closed the technical gap and bounced off of it, and sitting there right at that key line in the sand at the 44.50. But the trend is up on the 1 hour, is up on the 30-minute. It is up as well on the 15-minute. We're getting solid sideways consolidation. Coming down to test the 20 and the 9 right now. Keep an eye on the 44.50 again. It's going to be a key number for us. And then on the 5-minute, we've been just slowly bleeding off, but this is more consolidation rather than start of a downward trend in my mind. And we're going sideways. We're above the 9 and the 20. We do get a little bit of slope and separation, so the trend is still to the upside right now. Taking a look at the structure of the market. This is our composite. Our black composite goes back to the beginning of 2013. We were in this longer term price value area that we had from the breakout day and the gap up on the 11th, 0711, and the most accepted price there is the 53. It's a solid distribution zone, and we're broken above the key line in the sand, which is 43.75, but we've been using the 44.50. That was the value area low that we were watching, and we broke it now above it. It's shifted down a bit, down to the 39.25. Then we have the smaller micro composite VPOC that I started from the breakout of the upper balance on the 9th through till today, and its VPOC is at 35.25. And then we've got the value area low from the longer term at 40, basically call it 40, and then CHVN at 40.50, and then we're now above this 43.75 and back inside of this value area. So if we can find buyers and get to go bid up here, the target today is going to be up here at 53 and right back into the longer term balance. If we can't hold the 43, or I'm expecting we'll probably dip below the 43, come back down towards this 40 area, and then bounce again. But if we can't bounce, then I'd look for us to fall back into this balance, and the main target will be down here at the 35.25 CHVN. Taking a look at the Globex. Overnight, we opened up just inside of value. We pushed up into the 39.75, came back all the way back to Friday's VPOC at the 35. Tried to rally and break, couldn't, come back again. Second time they did, and then they just basically chopped around that 40 area until we got into the European session, and then Europe took us up and broke us above that key line in the sand, got to 47.50 and then fell back, and we basically were chopping around in around that 45, creating a double distribution with a very wide LVN that starts from 42.50 down to the 40. So taking our levels from overnight and moving them onto our main trade chart, our overnight high is 47.50. Our overnight low is 34.75. And our VPOC is 45. I'm going to move this down to 43.75 now. And then we've got an LVN at 42.75. So I'm going to put a trade level at the 42.75 as well, because if we get below the upper distribution and break through this LVN, I'm looking for a move back to the other side of that LVN down here at the 40.50 with the half gap fill. Right now, I can't put it exactly, but from 45, actually let's take it from 45.50. So our half gap fill right now is 40.25. That's from the gap for the close, not the range gap. And if we get below there, I'd expect them to come back to at least the 41.25, but most likely come down and dip down in here. So we're going to have a trade level that's going to be just below this at 39.75, and anything below 39.75, I'm looking for them to come down and take out that naked close at 37 that we missed on Friday. That's from Thursday, and come down. The value area high is 36.50 and the range high is 36.75. Then anything below that, I'm looking for them to come down and take out the naked close, the overnight low, and that naked VPOC. And then there's really nothing we need from that chart, so we can get rid of it, expand this out. And then below the 35, we really don't get much until we get down into the 29.75. I'm going to use the midpoint, which would be the 30. And then below 30, I'd be targeting a trip down to the value area low from Friday at 28. And then our daily ATR right now is running at 20.9375. So off of the high so far overnight of 47.50, our downside daily ATR target is down here at 26.75, and off of the low of the range, Globex range, our upside daily ATR target is up here at the 55.75, just a little bit higher than the 53. So those are basically the levels that I'm watching. We also have the range low, and then we've got this naked close that we didn't take out at the 2050 area. And then we've got the 1675 value area low from the microcomposite down in that area, 1675, and then 1050, and then the month low and the key line in the sand down here at 2107. And this critical mass is done, so we don't need that. All right, so looking at the levels above, our main target, of course, is the 53. There's not much between the 47 and 53. 47.50 obviously is going to be a key target for us since it's our Globex high, but there's nothing really to lean against up here. So I'm looking for us to hold and then slowly work our way up into that 53. We don't come into the next key line in the sand until we get above the 59, and it's not really going to be a key line in the sand for us now. It's going to be a warning line. The real key line in the sand is going to be all the way up here at the 66, which was key resistance, now is going to be our key line in the sand. Okay, so very quickly, let's go through our hypotheses. We are working our way up, so my main hypothesis is continuation to the upside. So what I'm looking for is an open auction out of range, a move down towards the 41 to 40 and a quarter, finding initiative buyers down here, and then rotating us back up through the 44.50, chop around in this area, push through, take out the overnight high, and move up into this 53 area, and probably test the other side of the balance up at 59, between 55.75 and 59. So Hypo 1 is an open auction out of range, a move down to pick up initiative buyers, rotate us up through 44.50 and get continuation and move to the main target of Hypo 1, which is up there at 53 with maybe a late day probe up into the 55, 59 area. That's Hypo 1. Hypo 2 is an open auction out of range, a move up to take out the overnight high, find responsive sellers, and then rotate us down through, chop around at Thursday's high and the half gap fill, push down into testing the range high from Friday and come down and take out the overnight low, and chop around in this area between 35 and 28 inside of Friday's value area. So Hypo 2 is open auction out of range, a failure to get continuation, break below the 44.50 key line in the sand, and then rotate down through to the 41.44, chop around there, and then push through, test the range high, and break into Friday's range and come down and chop around in Friday's value area and fill this profile in. You can see that right here and right here is pretty thin from Thursday and Friday. We didn't really auction this area properly, so we could come down and chop around in there. Hypo 3 is an open drive or an open test drive and a push up into 53, chop around there and then push up and break through the 59 and come up into the testing of the 66 area, taking out this naked VPOC up here at 62, basically getting a gap and go day and leaving a gap behind us and coming back up inside of this balance and testing the upper side of the distribution around the 53. So Hypo 3 is open drive or open test drive and a push up, leaving the gap below and then pushing up into balance, chopping around in balance, and then testing the other side of that balance up in the 66 to 62 area. Hypo 4 is an open auction out of range, a push down into the 36, failure to hold above the prior day range, push through, take out the 34, and then come down through the 28, chop around in the 28 area, and get a late day probe down into Friday's low and possibly down into this 2050 and taking back everything that we gained on Friday. So those are my four main hypotheses. Friday was a very good test. I wanted to talk about the deliberate practice again and the fact that you've got to set your goals every day and every week of what you want to accomplish, and then you've got to focus on those goals. And we talked about this yesterday on Friday during the course of the trading day, where we're going to make deliberate practice of holding on to our runners and then waiting for our targets to get hit. And I did that on Friday. I got long at the 27.25. I held that one runner for a very long time, right to the end of the day, basically until we got up and hit that target at the 36.75. So, make sure that you're putting your deliberate practice and your action items in your journal and making sure that you achieve those action items every day and every week. Anyway, that's going to complete the pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.